All right, let's get started. Let's get some. Oh, we got the screen up there. Cool. All right. A little different than starting off in the mornings. All right, here I am. Hey, everybody. So today is our briefing, which is great every other week. But hey, what's going on in these markets right now is a little insane, to say the least. So timely to review what's going on and to look at what may happen going forward. To do that objectively, looking at the charts, looking at some market internals, which I'm going to show you, updated as of right now to help guide us. Um, you're always welcome to ask questions. Of course, interaction is great. So let's get to it and see where we're at. So always a little introduction as to our objective and what we're doing for those that are not familiar with Master Trader. And so we've been doing the same thing now. I've been doing the same thing, teaching the same thing since 1994. Started out myself back in the late 1980s. Wow, it's a long time. Markets have changed dramatically, but the foundational information has not changed at all. And the consistency in what we do is the power of it. But let's review here. So our goal here, as it says, is objective market interpretation based on price. Structure. What is structure? Candlesticks. All right. Bars going up, down. Are they going up? Are they going down? How do we interpret that? Intermarket relationships. Boy, is that a timely subject right now. What's the price of oil doing? Inflation. What's the price of bonds doing? Interest rates breaking out, coming back down again, and really wild price action lately. Breakouts that failed, breakdowns that failed, whips back and forth. Yet there are still things that are trending very nicely. It's a very interesting market environment, but rotation has been wicked. What is rotation? Money flows from strength to weakness, and from weakness, it increases where things get stronger, start trending up, and the rotation is always continuing. Our job is to continually monitor that rotation and money flow to guide us to where that money is going into or out of. So we look at the current market environment right now. Based on the charts, we could say there's just a little bit of uncertainty going on. Yeah, absolutely. So techno-fundamental approach, market internals, technical analysis, intermarket analysis, what I call a three-legged stool, because they support each other and they help guide us. And that was a light bulb moment for myself many, many years ago, as we all gravitate toward the price patterns, the candlesticks, and any day trade to analysis. Yeah, we had a great day trade today in Meta. Things were kind of in flowing. I reviewed things. We'll take a look at those charts. Um, so technically, looking at price patterns, we're looking for consistency in what we're doing, of course, so we can make money consistently. But what I found out was, why did one pattern work, why another one didn't work? And at the time, remember, I knew basically next to nothing, could say close to nothing. So learning what made the markets move was a big uphill battle. So you start out with basic stuff, and the basic stuff is still what works. And then you find out, hey, the market has this huge influence on the majority of stocks. Some things are on their own page. However, the market does have a big influence, so we keep an eye on that. And so from that, we look at what's happening in stocks and ETFs and so on, what's moving the markets, what the charts say. And so, as it says, sound analysis is based on technical evidence, not self-serving narratives or opinions. And so we all eventually have opinions about what we think. But you have to be careful with that as to what you think. Is it actually lined up with what the chart is saying? Is the chart telling you what to think? Or is it about what you're hoping will happen? And we're all susceptible to that. Now, we always look at this particular slide as to explain how we approach the market. So each of these concepts, subjects, which I like to call thought building lessons, have subsections underneath them. So when I say price is king, everything else is secondary. That is to say, it's price that we trade. And look, how we interpret that price action, as it says, in a candlestick format with bar by bar analysis, as we put those together, right, as these begin to form what we call pivots or swings, highs and lows. And we define a pivot as a bar with 3 higher lows to the left and right, a low pivot, and a bar with 3 lower highs to the left and right, a high pivot. They begin to form trends. And so that's our trend analysis. Now, a trend in one time frame doesn't necessarily agree with a trend in another time frame. That is truly an art of understanding how to put that together at the right moment in time, because they don't always line up. Sometimes they do. It's great when they do. That puts the odds in your favor. And we look at these trends from the point of view of different traders that are trading in different time frames. And when those trends are moving in the same direction versus in opposite directions, there's a greater probability of continuing in that direction because we're all working together for the same cause, up or down. Now, people are going to trade against an uptrend at times. It's foolish unless it's gotten climactic, really extended. I don't subscribe to the words overbought or oversold. They're widely used in this industry. They're very misleading because if something comes out of a consolidation, an oscillator gets overbought, it doesn't mean it can't continue to go up, and vice versa. So again, we're not indicator people. Support and resistance, I've said it once, I've said it probably thousands of times. Look to the left of just, is there support there? Is there resistance? Is there a pivot there? And you don't need anything proprietary to do that. All you need to do is turn your head or shift your eyes to look over there. And I prove it every single day how simple that concept is to determine where prices will turn in the markets, in a stock, in an ETF. It's basic and it's powerful and it's not confusing like trend lines and VWAPs, anchored VWAPs. We had that discussion in the green room this morning about that. Simplicity. It just makes making decisions so much easier. Relative strength and weakness. What is going up versus what is going sideways? What is going down versus what is going up? You don't need any special indicators. All you need to do is look at it. Volume and moving averages. While secondary, they're useful. How we utilize moving averages and volume, for me, I don't look at volume in very much detail. What I do see is volume spikes. If I see a volume spike, it makes me take notice, similar to just looking at a big wide range bar. Take notice. If I see a wide range bar with a volume spike, two concepts coming together, that's more powerful. What are the broader markets doing? Sometimes the cues can be showing strength and moving up, and the Dow is going sideways, or the Russell is going down or sideways, or vice versa. So we need to monitor those. It's coming back to money flow. Where's those flows going into or out of? What's showing strength or weakness? and so on. Internals, we're going to take a look at that and into market analysis. I'm not showing any charts yet, Tracy. We're just going through these slides to give you a foundation of where we're going to go when we get to those charts. But you should see the slides. Turn to the left. Is that a new indicator, Marcelo? No, I know you're kidding with me. Now, position and money management. I have to keep saying this over and over and over again because it just flies in the face of common sense. This is what those that are starting out trading the markets are the least interested in. Sounds crazy, but I know just based on what people want to be educated on, what will they buy a course in? Candlesticks, trend analysis. Show me a buy setup so I can make money. How to manage the trade, how to share size accordingly, how to add to positions. No, they're not interested in that. It's crazy, but it's the most powerful thing. It's what will save you from yourself when you're starting out. And the trader psychology, these two things are intertwined. You cannot separate them. And if you think that's not true, put on a big position and watch what happens between your ears. All right. Again, none of these in of themselves is a trading strategy. Our job is to combine these together, and then we form a trading strategy. I've already mentioned techno-fundamentals, the three-legged stool, technical analysis. We're reading price patterns. That's what we're going to do in a few minutes. We're going to look at trends. We're going to determine what those trends are objectively. We're going to look to the left for support and resistance. We're going to look at multiple time frames and put that all together. The intermarket analysis part, what are stocks doing, bonds doing, commodities and currencies? How do they affect each other? That's a lengthy conversation, but we'll look at some of that today also. But one of the most simplest things is, hey, if oil's going up, that's an expense. It's inflationary. If oil's going up and it's going up a lot, well, airlines are going to have costs going up unless they're hedged well, right? That's going to make it more difficult for them to make money. Their expenses are going up. If interest rates are going up, it puts a cap on home builders. A lot of this stuff is common sense because we deal with it ourselves personally. If you're looking to buy a house and interest rates just went up a point, the price of that home just went up dramatically for a 30-year or a 15-year mortgage. Market internals. Now, over the years, I've looked at lots of market internals. Probably at one time, I was looking at, I don't know, at least 20 different internal market gauges related to breadth and sentiment. And one of the things that I found out was they overlap each other. It's, just overlap. You're looking at the same thing, manipulating the data in different ways. So just narrowed it down to a simple breadth internal and sentiment based on put call ratios. How traders feel about the markets. Are they overly bearish? Are they overly bullish? And that gets updated week to week, day to day. One of the things that I mentioned this week was that when we review SPX puts and call options and where the extreme bets are on a day-to-day basis, pre-market, they were betting on a monster crash based on the news, the war that was going on. And when you look at it technically, well, we could say that, is that possible? Anything's possible. Is it probable? Hell no. But there's such a fear in the markets based on that options activity, it becomes useful. One of the ways that we use options activity, I used today when we were trading Meta. And while Meta, as I looked at it, looks great, like it's going to continue to go higher. I pointed that out pre-market. The option activity said it was likely to stall at a certain point. So I took the money. Still, that's on a very short-term basis. So we have lots of information that can help guide us versus our opinions. And when we look at these charts, right, this was a big thing for me. Still is today, of course. Pictures of other people's beliefs and expectations created with money. Why? Well, one of the things that I discovered, right, there was much less information when I started out. There was no internet when I started out. So it was very difficult because you had to figure things out on your own. And so, and at times it was painful, right? There's always pain when you lose money. So one of the painful experiences was, how did I possibly sell the low of that move? Well, it started out with not adhering as to a stop, right? Which is a big problem for all of us when we're starting out because we don't have a method. But how the hell did I sell the low of the move? I was so sure it would continue to go lower. And then by reviewing the charts and doing it more than once, I discovered what that picture looked like on the chart. And this is what drove home this fact. Technical analysis is pictures of other people's beliefs and expectations created with money. And charts reflect to us that. And it reflects to us when traders have gotten too bullish or too bearish, when things have moved to an extreme. And that guides us to the probability of how they're going to act next, which leads us into the patterns, the candlestick patterns. And that provides us what's happening on an ongoing basis. And we call it candle language because it speaks to us on an ongoing basis. This is not what we're about. This is what's called an Ichukumi cloud. I learned how to say that word. Someone broke it down for me. But this was created by a very intelligent person to create the ultimate indicator that follows trends in multiple time frames to find support and resistance, where to buy, where to sell, and so on. And you can see it's just got all of this mess overlapping the bars there. What this is down here, I have no idea, but I found it. I saw it on a chart and I was like, wow, that, putting that all together must be impressive to look at, especially for those that really don't know a whole heck of a lot. Because when we're starting out, we believe the market has to be complicated. And the more complicated a screen looks as to explaining what's going on in the markets, as we're starting out, we become very susceptible to that kind of thinking because we all think that it has to be that way, but it's not. Right? You just need a very clear systematic method of following the trend on an ongoing basis. As I said, looking to the left at support and resistance, looking at areas like this. I pointed this out this morning in the green room, not this exactly. I pointed out the same concept of slowing momentum where the markets had moved up very nicely. And on a 5-minute chart, they were reaching resistance. Resistance doesn't mean they can't go through resistance, but it means that the probability of stalling there is a high probability. And so the distance between the highs, right, we're getting closer together. And, the markets now are kind of just looking on another screen here. They've just slowed down. They're not doing a whole heck of a lot, just consolidating the gains actually bullishly. They're going sideways at that resistance. So when we see momentum move very rapidly, such as this, odds are it's going to continue to go lower. Lower to where? Some area of support where then momentum slows down. If it's going down, and then it begins to retrace, and that creates trading opportunities for us, which we look at every day. Now we want to simplify candlesticks. And while there's all these different names of candlesticks, morning stars, piercing patterns, I can't even say it. Pan bottoms. There's some wild names out there, Ichikumi clouds and so on. Just keep making things simple, right? There's wide bars, there's narrow bars, there's small candle bodies, and there's ones with tails on them. Candlestick patterns is putting together these individual bars. And someone always says, well, what's a wide bar? It's just a visual representation compared to the past as to that's a big bar compared to the ones that preceded it. Well, what does that mean? That means that there was power. If it's a green bar, it was power to the upside. And if it's a big red bar, there was power to the downside. Always, where did it happen? So a big red bar coming out of a consolidation and there's no support to the left. Common sense tells me it's likely to go down. And vice versa. If I get a big green bar out of a consolidation, it's likely to continue to go up. What happens from there? Apply the next bar to it. Is it another big green bar? That would be positive. Is it followed by a little narrow range bar, which tells us that momentum is slowing down? Is it a red bar that it's reversing? And as we have these, is a wide bar subjective 1.2 average true range or 2-bar average true range? You always ask interesting questions, Alex. I appreciate that. So it would be relative to what we're looking at. So if some prices were consolidating and you didn't say average true range over what period of time, but let's just say 5 days or 10 days or 14 days. If the average true range over the last 5 days was half a point, and now it's more than doubled, range expanded. Now, average true range is averaging out the closing prices of those bars, or do you want to get fancy and do an average true range that is averaged by the high, low, and close? So you get more and more complicated into things the deeper you can get into the rabbit hole. So whether I'm looking at average true range and saying, hey, prices expanded, I look to the left and I was like, did it expand from this? So if I could drag this red bar and put it over here where it closed under all of these bars, the average true range would increase dramatically. The interpretation, whether I had an average true range indicator on there or not, the message would be the same based on price, because indicators cannot dictate what price is going to do. They have to follow what price is going to do. Now, as that happens, make sure that the bar is complete. That's another lesson or concept, because this big red bar could turn into this bottoming tail bar. That's a powerful message also. So if prices were let's say in an uptrend, and I saw this pattern and I'm thinking, oh, I'm going to buy the breakout. Nothing wrong with that. However, what if it broke down under here? We would have dragged this over here. And then at the end of the time period, it looked like this. So then we drag this over here. Now, being in an uptrend, and this formed this bottoming tail bar, which tells me that buyers took control in an uptrend, that's aligned. That's aligned with being in an uptrend and a bias that it's going to go up. Where it was a little downside shakeout, that gives me an overwhelming amount of confidence that it's going to go up. So as we put together these individual bars in alignment with where did it happen, my confidence goes up. Now, that doesn't mean I'm not still going to use proper, intelligent money management, but I know that based on historical patterns, the probability of this trade working out is high compared to continuing with little narrow range bars. And the same thing if it was in a downtrend and I dragged the topping tail bar and I put it here. Right? So the combination of these candles, bar by bar analysis, putting that together, where did it happen and what is the trend? That's the key. It's this is the essence of what we do, the simplicity of what we do. Now, getting your head wrapped around that on an ongoing basis is the challenge, the hurdle, because like anything that we do, you have to control your mind as to think that way, because you got too many, the more variables you have, the more difficult it is to make decisions. And so you're always going to not know everything because the markets are too vast to know everything. But if we know enough, we could place a trade. Right? So you can scan this to find out more about Master Trader. The link here is about education. I just dropped it in here. Demas and Alex is asking about automatic trading strategy. Sure. So what he's saying is, ChatGPT or Anthropic can evaluate how large a bar is. Sure. So if it's no different than creating scans, which I've done in TC2000. So I've defined what a wide range bar is and created a scan for that. Now, I've created scans that say, show me a wide range bar with a narrow range bar the next day, which is a 1-2-3 pattern. And so whether it's ChatGPT or Anthropic, yes, that's amazing stuff, AI, but it cannot reinvent the wheel. If you expect AI to create the ultimate platform, and the more I see on the internet today about AI telling you how to trade, I'm waiting for someone to tell me that, oh, they made $1 million from the latest, greatest AI trading algorithm. Right? So it's all based on price. How you guide your belief system based on that price is the key. So, garbage in, garbage out. Average true range into ChatGPT. What are you going to do with that in the end? Not a whole heck of a lot. It's still going to come down to trend, price patterns, voids, multiple time frames, money flow, support, resistance, so on and so forth. And while ChatGPT or any algorithm could monitor hundreds or thousands of stocks, once you get that list, what are you going to do with it? How many of those things can you do at the same time? And I guarantee you what'll happen, because been through it, done that. Set too many alerts. They're all going off at the same time. Which one do I do? Which one is the best? No trade. No trades, because you're churning off alerts. You have to narrow things down to what works for you. Right? Yes. All right. So keys to success. You don't have a trading plan. I can guarantee failure. You don't have a trading plan. You can get lucky on any given day. Right. So we need plans. We need to put together what I've been telling you and how you're going to follow it. It's kind of your thing to deal with, so to speak. We all do. You got to, get in there, get a little beat up, settle in on understanding that there are basic technical things that come together at certain times that put the odds in your favor. There are no guarantees that you're going to win, how you're going to manage it, and so on, how you're going to add to that position. That's truly the key, right? How can you add to a position that the odds are in your favor? That's how the real money is made, by doubling down on what's working, right? Exponentially increasing your profit potential. But that requires a deeper understanding of everything that we're talking about, right? So patience and discipline, how to follow that plan, that's probably the hardest part. And so you need the proper money management to allow yourself to make mistakes at the beginning. That's how you survive, to be able to make it and increase the odds of making it. This is a free thing. You don't even have to give us an email address. I post things. Dan posts interest lists. I posted a video in there this morning, different trades. Um, you know, so it's not the same as being in the green room, of course, or like having a letter with things are updated, but just to log in there and maybe get an end of day update or an interest list of what we're focusing on, a trade setup. It's probably better than 90% of the other information garbage that you'd be looking at on the internet. I'll tell you that. Right. This is current right now. What's happening? So in the ETF letter, this is our trend matrix, and we update this in the ETF letter as to where money is flowing into and out of. What's the trend on the daily time frame, the weekly time frame, and the monthly time frame of all of these sectors? And if they're all green, right, common sense says they're likely to continue to go up. Sometimes they shift. This is the previous week. This would be the current week, and this is the previous week. So on a week-to-week basis, we can see, has the daily trend changed, has the weekly trend changed, and the monthly trend doesn't change too often. But when it does, it's something to pay attention to. So sectors that are all green have the highest odds. Now, the current market environment played havoc with that, meaning this healthcare sector, we were looking to buy that because it turned to an uptrend in all time frames. And then it wind up gapping down. So no harm done because it never triggered. But daily, so when I post this, which I posted this in the ETF letter on Saturday, that was the current trend on the daily time frame. This was the previous week's trend. So we look for changes. So software moved from a downtrend to a sideways trend, which often precedes the next move to an uptrend. And we know software has been showing relative strength lately. Now, in really wacky market environments, it also happens where something moves from a downtrend to a sideways trend and goes back to a downtrend. So this doesn't save us from insanity, but it gives us an objective guide as to what's happening on a daily, weekly, and monthly basis. And so looking at these, we can see if it's all green, odds are on the long side. And there's nothing currently that's all red. Nothing all red. And at times there is. As markets correct further, we will have situations that are all red. So as we look at these, you say, well, at retail at this time on Saturday, it was green, but wasn't completely green. So maybe it's transitioning and it could turn to an uptrend on the daily. It also could turn to a downtrend on the daily. And then it could evolve into further deterioration on the weekly time frame. That's the unknown. But any deterioration in longer time frames begin on shorter time frames. So we watch this. Look, internet changed from a downtrend on the daily the previous week to a sideways trend. So FDN and IGV both look really good. Coming off of bottoms, they were downside shakeouts and look like they may not get to an uptrend. They've got these voids. They've got room to go up. So they'd have to go up quite a bit. But one of the things that we'd be looking for, if it goes up quite a bit, right, the biggest word in the dictionary, does the weekly trend turn to a sideways trend? So does it become more and more positive? So we can have to continually monitor these trends in multiple time frames. Look at solar changed from a uptrend to a sideways trend. So that deteriorated. Gold is doing what it's doing, and we look at bonds and banks and so on. So this was a big negative on last weekend where financials went all the way from an uptrend on the daily to a downtrend. That's significant to change from one week to another, on a daily time frame. And so here's financials in a downtrend 2 weeks in a row. So again, this continually allows us to monitor what's happening. I update these every week. Then we review market internals. So I captured this before we came on, and these are the two sentiment internals, put call ratios. And you see down here, this was a positive. We came into this week with, this war situation, and this was the big nasty down day. It gap down this day, and then yesterday was down, and today prices are up for the moment. The bar's not done. You've got lots of this congestion there. But a positive was that the sentiment gauge had reached a bullish level. That tends to put a floor under the market. Right? It just gives us some insight as to a probability. Breadth has been dead neutral, which is unusual historically to be neutral for so long, but look at the mess that we're dealing with. So there are sectors that are doing well. There are sectors that are not doing so well. These are improving. This came down quite a bit over the last couple of days toward a bullish level. And what we're looking for is when breadth and sentiment align with each other. Historically, and I've been doing this for decades, when they align with each other, odds are the market's going to reverse. Now, the market could be in a bear market, and these bands align for bullish and bear markets. They adjust the extreme levels. But when they reach an extreme, we can have trend trades or counter trend trades. It all depends on what's going on. Ultimately, price is king. What's going on? Here's the daily chart and the weekly chart. We need to put that in perspective of each other. So the daily chart, these are the cues, as you could see. They're trending down. They held this support area. This is trending down. This weekly time frame is going sideways. They're not aligned. Now, if this was to break down below here, right? If this breaks down below here, there's going to be no doubt what the hell's going on, right? So we all look at different pieces of information to guide us to what the probability is and what we're going to do. So let's say this does this. You don't need any proprietary indicators. You don't need any guru on CNBC or anywhere else to tell you what the hell's going on. This has been going sideways for months. It's formed a big support area. The weekly's going sideways. These are misaligned. So odds are it's going to be choppy. We don't have any internals lined up at a bullish extreme. Neutrality. So we need more information. That doesn't stop us from doing trades in different sectors like software, right, which is improving for longs or maybe a put spread. But an individual bar, a big bar, there's no denying the message. You don't need any indicators. This has been going sideways for a while. If the prices break down and close below here, the message is it's going lower. Then we see what the next bar does, and the next bar does, and we update accordingly, right, in different time frames as to what's happening so we stay objective. One of the goals of utilizing market internals, intermarket analysis, bar by bar analysis is to protect us from ourselves. Meaning once we form an opinion, especially if we've placed a trade, we don't want to give that up. Well, we need objective information, and we have to believe that information. That's a big thing. All this stuff I could tell you, you could start using, you could be skeptical about it. Eventually, you have to come to the point of saying, I accept that there's no guarantee, but you know what? What Greg is sharing for me, I understand it. It's common sense, and I know how to adjust things. That's the power. You know how to adjust things and change with the market environment. Another scan, you can check out the memberships, the different letters, weekly options trader, credit spreads, the swing letter, ETF letter, chart of the week. Of course, that's a free service, but I put out good information there. You can check that out. And I don't have the link there, but if you go and look on the website under Start Here, check out the blog post. There's lots of good information there that you could learn from. So you can check that out. Trading education, I gave you that link already. Again, you can check these all out. Read there. If you have questions, you can email me. And that's it on the slides. And I'm going to bring up the charts here. And we're going to look at what's happening currently. We're going to look at some sectors. And oh, share. Okay. So let's take a look at the broader markets first. And let me put this on diamonds. This is what we call the four horsemen. And we look at these markets and what they're doing. And what we see here is that there's a state of confusion everywhere. And so while this situation happened in the Middle East, what we see happening here is that institutions and traders continue to buy the dip. As prices get extended lower, right, things become what traders are interested in to take advantage of on a short-term basis. And we always have to put that in the context of higher time frames. So as we look at the daily time frame, things looked god awful yesterday. And now at the end of the day, they became a green bottoming tail type of a bar. So in last night's update, I said, okay, this is great to have come back after violating all of these pivot lows. Prices went down to the next pivot low, look to the left, and buying came in to drive it right back up again from that point of view. Now, the question becomes, is that a bottom? We want to know, is that a bottom? Because if it's a bottom, we could take advantage of that. Well, I don't know if it's a bottom. I see this mess that's going on since Thanksgiving, essentially. And so one of the things I pointed out was, while this is a nice size green bar, it did not penetrate deeply into this bar. Now we have that. We're going to get to the intraday timeframes. Now we have that. So as we get past today, and of course, as we get into the end of the week, we're all going to be interested in where this week ends. And while it seems, based on yesterday's price action, especially at around 10:30, that it was inconceivable that prices could get back to the top of the range, if prices close like this and they go up again tomorrow, you see how this belief at 10:30, which was very bearish, continues to dissipate by utilizing bar by bar analysis and retracements. So we'll see if this is going to hold on to the gain today, because it's about 1:45 and this bar is not done. And we see on the Russell what it's doing. I see the Dow broke down. That's the weakest. I don't need any relative strength indicator. Just look at the bars. It broke down and it hasn't been able to get back up again. The Qs marginally broke there and came back up. And look at the depth of retracement there. It's almost to the top of this little trading range. So we want to look at the weekly time frame. We already looked at this. I showed you in the slide. These lines here are options expirations. They are very helpful to know when options expirations are. Short-term turning points. Sometimes wars have more of an effect, but they're very helpful to know when those are. And so does this close like this at the end of the week? Or like this, where this is broken down? This looks the worst. Are the Qs, are they here? Is it a red bar down? Is it closing up here in the middle of the trading range? Which just means just more of the same mess that we've been in. Lots of indecision. What's going to happen on the Russell? Now, as we look at this intraday, I go to the 65-minute time frame. And so this morning, it's like, oh, I don't think this is going to be able to get very far above this resistance area. Now the Qs did. That's showing relative strength. The S&Ps did not, but their ability to at least get there is a plus. And now it's going sideways. Everything's going sideways right now. So now if we look at the 5-minute time frame and we see how prices are basing here at that resistance, this is a concept of absorbing supply, or simply put, bullish price action. If you call something resistance, that means there's supply there. If prices come up to supply and prices don't go down, that means they're absorbing supply. Buyers are coming in and they're saying, hey, this is where sellers are. Someone bought up there and got caught. Right? People bought up here. Right? This was the big reversal day that occurred. And then it gapped down that day. And then around 11 o'clock, this is where we had some longs in the green room right here. And prices moved up very nicely. And now today, they continued. And now they're going sideways at this resistance area. Absorbing supply, call it bullish price action. What's happening right now is that while prices have advanced very nicely, sharply, creating this void below, institutions, I call institutions, that's where the big money is, are saying, you know what? I believe this is going higher. And I'm fearful of missing out. FOMO, fear of missing out. That's what they're afraid of. So they continue to accumulate, even though prices are short-term extended. There's only a 5-minute chart, but they're accumulating in an area of resistance. It's not going down. It might go down by 4 o'clock. I don't know what it's going to do. But right now, if I apply bar by bar analysis, I explained what pivots were before. Pivot created support. Buyer showed up at the pivot. It didn't even get down to the pivot, and it formed a bottoming tail bar. So traders, institutions, whoever they are there below bidding for the markets, right? Markets. We could apply the same thing to anything else that we're looking at, which we're going to do. So right now, what we see is damage has been done. Prices are repairing the damage, so to speak. There's bullish price action right now. We go back to the daily charts and say, you know what? This looks like it can go up. Looks like go up. Go up to where? The next pivots are up here. So as we look to the left and we look at the distance between highs and lows, do we have big voids or little voids? These are relatively small, but on a day-to-day basis, it can be a pretty decent move. But as we start looking at other instruments, we start finding other opportunities, like software. This led the way down, right? From this topping pattern, it led the way down and it accelerated. I showed you before the concept of slowing momentum, the distance between the lows. And now it's taken out major resistance. We didn't even talk about that, but so we have other concepts. We can't cover all of it in an hour. Major resistance is the high prior to a lower low. This has broken the back of the downtrend. Has it done it in a weekly time frame? No, I don't even have to look at it. But does this present us with opportunities to go long? Yes. For those that do put spreads, yes. Right? Selling a credit for short-term credit spread, put the odds in your favor. FDN led the way down. Similar pattern. Money flows into what's weak. Right? Slowing momentum, back up again, wash, repeat. Look at the candle. Gap down, move down, back up again. Now, if you could take this kind of a pattern, which we have to find it, we can't do it mechanically, but if you could take this kind of a pattern and put it in the context of an uptrend with room to go up, now we have more concepts aligned in our favor. So as we look at different sectors, here's the Magnificent Seven. that's not so attractive, although it's trying to make a bottom. Let's pivot highs, pivot lows. Um, Maybe it goes sideways for a while, but this isn't as high a probability setup as a counter trend trade as this. So as we look at these different setups, we can apply the different concepts that I've been talking about that would say, hey, this one has better odds than that one. So I'm going to trade the one with better odds. Ultimately, they all come down to money management and how you're going to um, manage any of these. Just looking what others I have here. So as we look at individual stocks, again here, this is just an active list. I got it sorted by what's negative, but we could easily sort it by what's positive, which I'm going to do to see what is positive. But this, you got some money coming out of rotation out of that, but it's in an uptrend. So there's nothing to do with this other than take note of it. And maybe I see $600. It's on some support. I'm going to set an alert up there and just say, you know what? If it gets up there, down there, I should say. Just doing that. Click on that. A whole number. I know there'll be options activity there. Geez, I may as well just type it in there, right? Easier. And just set an alert at that support level. And so what's strong? And here's coin. This is related to Bitcoin. And so we've got open positions in Bitcoin related instruments. This was one of them. And so it was uncertain over here. We knew that it was bottoming over here, but this had gapped up. This was the earnings when it reversed. That's what the E is. And so sideways price action, moved up, sideways price action. And if we compare this to the broader markets, where the broader markets were going down and this was holding up, it was showing relative strength. No proprietary indicators needed. Just look. This didn't go down. Market went down, showing relative strength. Buyers are not running away from this. They weren't running away. Well, they began to run away from software, but they came back in again aggressively. So this communicates to us again what other people are doing. And that once we determine that the probability is that something is likely to stop going down, which moved to sideways, remember our trend matrix, starts going sideways and can transition to start moving up. And so wash, repeat. Well, this is going sideways, support. There's nothing to do with that. It's trendless. So there's a lot of damage have been done here. This gapped up on earnings. Here's another bottoming, MSTR. This is related to Bitcoin. It's stuck at the 50 MA. And so is Tesla. This had a nice setup this morning. I didn't get a chance to do it, but I was talking, but I pointed this out here. This is a 5-minute chart, and prices spiked up into resistance. They pulled back to a reference point, formed a bottoming tail bar. Remember, this was a big red bar prior to becoming a bottoming tail bar. What does that communicate to us when we see that? If a red bar turned into a bottoming tail bar, it's obvious. Buyers bought it. And as the slide said, the location where it happens is the key. So in a 5-minute time frame, you can see the moving averages are pointing up, 200 MA. All of these are related to other time frames is how I look at moving averages. But so this came out of a consolidation. It was a power bar up. It pulls back. The blue line is the opening price. The red line is yesterday's close. You got a reversal. Just a pullback pattern after a power move is likely to go up. Right? This was another one today. Right? It was a buy, and it's holding up. This one I mentioned in the room I sold because of the options activity at 170, and it went up a little bit above. It's churning around there. There's just like a lot of bets early on that it was going to get to 170. So when it gets there, they're going to take their money, and there tends to be a stall in the activity. Nonetheless, on the daily time frame, it still looks good. I'm interested to see if the buyers come back, but you see it's into this congestion area over there. Amazon did well today. Again, bottoming pattern, sideways. Look at the 65-minute chart. I pointed this out pre-market. Consolidation. It moved up. You go to your 5-minute chart and, bullish price action there. And so prices are consolidating today's gains. See ya, Gregory. Another Gregory. And my mother always called me Gregory when I did something wrong. She wanted my attention. That's my official name, Gregory. So the message here, right, everything that we've been covering, is that if you approach things in a systematic process and find the ability to follow the rules that we create or you create, if you accept them, the odds are in your favor. And so understanding how to put together these in a systematic way, which I've given you the foundation of, is the key to successful trading. And position and money management, always share sizing accordingly, adding to positions. Um, you know, I hate to say it's easy. It's easy to understand everything that I've explained, especially once you've heard it multiple times. And so once you've done that, it starts to drive home, and then your job is to continue to do the same thing over and over again. I'm going to be presenting here next week, and Dan's going to be doing something as well. I don't have the link at hand at the moment, but you can register for that webinar where I'll be covering more information. How can I bring up the black and blue candlesticks in TC2000? Jim, if you have my scans in TC2000, all you need to do, I'll show you, is go in here and go to price. And over here where it says show conditions, just click on that and then add the scans, the scan for black bars, down bars and up bars. If you add those and color them as you choose, then that scan will be applied to individual bars. So I'll just show you before we wrap up here. So these different layouts I share with subscribers and students. And so this one here just scans everything. So different scans, bullish 180s, 123s, bullish wide range bars, you can see, makes it relatively easy to find, but you got to put it in the context of the trend, support, resistance. So patterns like this are great for credit spreads. Others that are in uptrends where moving, everything's lined up for directional trades. But here is what I utilize, what I call a top-down approach, meaning what's happening in the broader markets. Like I said, where's money flowing into and out of? So we can see that on a daily basis. We can easily see just by flipping this, what's the percentage change on the day? And I see, Bitcoin doing well. The NASDAQ 100 is doing well. And I do the same thing on a daily, weekly basis. Volume, is there a volume strike? So there's a big volume there on USO. And so from there, we can look at individual ETFs. So say like here, we have materials. I'm just going to take this away. I was utilizing that for something else. Now, materials broke down. Money came out of it. It's been doing well. But within that particular sector, I may want to find related to that sector. I could find these in the other layout, but there's no bullish 180s and there's no, oh, here's a bearish 180, but it's in an uptrend. Right? It's a copper stock. You get the idea. We're looking for certain patterns. And if I go and look at the Qs in the NASDAQ, I probably should be able to find some bullish wide range bars by just clicking that. So understanding what these are is essential. Topping tails, weeklies, and dailies, and bottoming tails, and 1, 2, 3s. So looking for these in a particular sector, right, I can see here bookings. This is great for a credit spread. And it even could be a directional. So all of these stocks and sectors that have been beaten down, that are forming these kind of patterns, could go up for another day or two. This presents us with a great opportunity. And so looking at that, I look at Intel here, and I see it's a wide range bar. I have to put it in the context of what's happening, and it's got all of this resistance there. So it's not the greatest pattern to suggest it's going to go up in a significant way. However, bar by bar analysis, what if this went sideways for 2 or 3 days and formed a bottoming tail bar, a correction bar? We didn't even cover correction bars. There's lots of stuff to talk about, which we do in the green room and in coaching sessions to reinforce what we're talking about here. This could become a great opportunity in a couple of days. It's in development mode. There's AMD again. This one's in a downtrend. I'm not interested in that. And so each opportunity can present itself for different vehicles, meaning this could be excellent, and it is. I have to look at it. I think we have a credit spread on this. We have multiple put spreads as things began to reverse yesterday, but this might go up to these converging moving averages here. However, from an intraday trading point of view, right, presented a great opportunity. So what is the vehicle you're going to use? Intraday trading, credit spreads. You could do a swing trade on this, of course. It's not in an uptrend, but it certainly looks like it can continue to go up. And so we just, as I said, wash, repeat. This one we were keeping an eye on, was on the list earlier in the week. And then you know what happened? And so buyers came back for it, wide range bar. Again, these foundational concepts that I've explained to you is what you need to get your head wrapped around and assimilate this information. And the fast track is a course. I put the bar by bar analysis course. There's the swing trading course, and there's option courses. And if you have questions, email me. Dan is away for this week. I think he's still answering emails. But again, if you have questions, email me, and we will be back in 2 weeks. Next week, Dan's doing presentations. I'm doing presentations. We'll be emailing those links out. I gave you one. So yeah, sign up for those. They send out recordings. So even if you can't make it, you get the recording. So again, we'll talk soon. Bye-bye.